welcome everybody to the City Festival of Space. Today we're doing space innovation and getting the most out of your R&D tax concessions. So to start off with, we're going to do an acknowledgement of country. In the spirit of reconciliation, My Security Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders, past and present, and extend that respect to all Aboriginal and Torres Strait Islander people here today. So thanks for joining. We're now in our fourth week of sessions for the City Festival of Space. I think we must be on numbers 16. We're very far along. So we've had a whole bunch of different sessions. We've got over 60 speakers that are a part of this festival, which is incredible. So you can see some of the pictures here. We've covered a whole array of different topics. So hopefully you've had a chance to check out some of them already, but if you haven't, they are on our website, www.acity.space. You can check out those recordings there as well. So a huge thank you to our platinum sponsor, Inmarsat. Thank you very much for your support. Thank you to our gold sponsor, Fugro Spark, our Women in Space sponsor, Lockheed Martin Australia, and our official media channel, Space and Defence. Today, I am joined by the wonderful Stephen Carroll. He's a director at Evolve. Now, you may recognise him. We actually had him moderate our Investing in Space panel. So he's back again, this time to talk about space innovation and getting the most out of your R&D tax concessions. So Steve, I welcome you to turn on your camera and your audio and join me on the screen.
Excellent.
Hello.
I'm back. Here I am. How you going?
Welcome back.
Thank
Well,
you.
Without further ado, I will hand over to you and let you run the show. Thank you.
Fabulous. Thank you for having me. Oh, my office just fell apart.
Oh,
Hold
no.
on 2 seconds. That was bad timing.
Frosty ring light.
Look at that. Got too excited. There we go. It's back.
Great.
There you go. Technology. There you go. Let me throw my screen up. So thank you for having me back. And now I'm blind because I looked straight into my light. There we go. Share that one. So yeah, thank you. Absolute pleasure to be here to share the tips and tricks with the R&D tax program. And so we've got a nice little audience here today. Let me just play with my windows so I can see who's here. But I'm really keen to make it as interactive as we possibly can as an online session. And so please, there is a Q&A section there. So if you all know how to use the Q&A, hopefully we should know that. And also the chat section. I'll try to keep an eye on them, and Jess will let me know if I'm missing stuff. But just to make sure it's all working, there we go. There's a welcome to everyone from Jess. Just a quick shout out, because we're all around the country and maybe even around the world. Can you just quickly throw into the chat box there where you're from? So obviously I'm in Perth, just so we can check I can check the chat's working and we're engaged there. Just throw in a little bit of a comment for me, just to say hi or where you are or what's going on. There we go. But yeah, that's right. Jessica's in Sydney. Come on, Roy. I know, Roy, you're in Perth. I saw you there. You can't hide in the background. Come on. There we go. There. Thanks, Roy. What else? Who else we got there? Chris. Thanks, Chris. Maybe some people eating their sandwiches. You can type and eat at the same time. From Queensland. Fabulous. There we go. We're getting all corners of the state. Well, we'll keep that flowing through. But what I also want to do, obviously, I've got a slide deck and I'm happy to share it. So what I've done is I've obviously got it in a PDF here, and there's a lot of stuff in it. We'll go through the key parts, but also the key parts that you want to go on in deeper, and then that's where we'll stop, pause, and talk through. So what I want to do as well to start with is, if you're coming in today with any preconceived questions, comments, thoughts, myths that you want busted, facts you want clarified, or like, I've been doing this for a while, should I be doing this or should I be doing something differently? Because there have been some slight tweaks to how R&D has been managed and how the benefit sort of flows through. Thank you, Alex. Adelaide. So we've got most states now. This is good. So what I would like you to do, now we're going to test you on the other side. If you've got something you want us to deal with, or you want me to deal with either upfront or specifically, we've got the Q&A box as well. So let's see if you can use 2 bits of tech at the same time. Anybody that has a specific thing they would like me to cover today, please throw it in there now, or at any point in the next however long, and I'll keep an eye on it and we'll deal with that as well. So please put in there, like I've suggested here, anything you would like me to talk about, cover, or get into. And that's one of the tricks with R&D tax. There are an awful lot of myths. There are an awful lot of, I thought we should, or my mate does this, and I used to do it this way. We need to get through those and actually get to the meat and potatoes, the actual, how you actually make a claim and what that actual claim should be. And space is an industry, as you're all finding out throughout the course of this amazing month, that has a lot of different angles. And from an R&D tax perspective, one of the great things about it is it doesn't discriminate. And so whatever version of tech you are doing for the space industry, there's most likely an R&D tax angle in there somewhere. So we'll jump into some slides and then we'll see how we go. So like I said, throw some questions in. First and foremost, let's just get some of the key points in and out of the way. One of the things, the beauties of the R&D tax program is it's a self-assessment eligibility-based incentive. And so what does that mean? Well, a lot of people can confuse R&D tax with a grant. Grants are normally prospective and competitive. So you put an application in for a grant. If you're successful, you get the money and you get it for as you're spending normally. R&D tax is completely the other way around. It's eligibility based. So if you meet the criteria and you follow the process, you make eligible claims for eligible costs, you put the claim in, then you get the money back. So it's the complete opposite. But because it's eligibility based and there isn't a competitive nature to it, you've got that certainty of, to an extent, on how much cash you're going to get and how you can then obviously apply that as well is completely up to you. So the repurposing of the benefit you get back from an R&D tax claim is to do whatever you wish with. One of the confusions is often, oh, I've got to keep spending the benefit back on R&D. Well, no, you've spent the money on R&D already. Now you can spend it on whatever you want back through your program. So it's also a two-stage claims process. So R&D tax is what is R&D, research and development, and then the other side is what are the tax costs that I can claim. So you've got the financial side of it, and you've got the technical side of it. From a financial perspective, we're dealing with the ATO. From a technical side, we're dealing with Oz Industry. So two government departments, two sets of basically forms and processes and procedures to follow, and obviously potentially two pathways of reviewing and auditing your claim. But that's fine. You do the right thing, you get the benefit. As I said, it's retrospective. We'll talk about the potential for it to be less retrospective, but basically it goes in your annual income tax return for the company. So you get to the end of the financial year and you make a claim and you get your money back then. So you spend it all, then you make your claim, then you get it back. And it's a yearly retrospective process. What you do have now, for those of you in the rebate position that we'll talk about, we've got superstars like Roy and the Radium team able to help you get your rebate earlier through their debt funding programs. So while you've got this retrospectivity of getting your cash, after you've spent it, you can potentially bring some of that forwards with great programs and people like Roy from Radium. Well done for sneaking in there, Roy. And there is a cash opportunity. So one of the big myths, there's a smiley face, thanks mate. One of the big myths is you only get it when you're paying tax. No, completely bust that myth out of the gates. It is for startups as well as medium, small, large, everybody gets some form of benefit. But if you're in losses, tax losses, and you spend money on R&D, you actually get a cash rebate back. So you get up to 43.5 cents in the dollar back for the money you spend on your R&D. So we'll talk about that. So big myth. I've had to upset a lot of people over the past where they haven't made claims because they thought because it was tax and they weren't paying tax, they couldn't get it. Upside down, back to front. Startups and early stage companies can get some very good support out of R&D tax. So let's go through some of this stuff. Who can claim? And also for those of you who are watching this little presentation in the future, they will also make these slides and the content available for you as you need to. But also everybody, I haven't done the disclaimer thing. We are dealing with tax legislation and and government legislation that is based on the time. Right now, it's the 24th of November, 2021. So whenever you're watching this in the future, just be mindful that the legislation may have changed or how it's interpreted could have changed. So let's just be a little bit mindful of that. But the R&D tax program itself, in some way, shape or form, has been around since the 80s. So it's not like it's going to, well, hopefully, there's been some question marks in the past, but it's not likely to be one of those programs that just disappears. But how it's applied or what applies could change. So who collects the claim? Well, unfortunately, this is where we do break a few hearts, particularly in the early stage or in some sort of more complicated corporate groups and structures. Eligible entities, R&D tax entities, are incorporated Australian companies. So effectively, you're a Pty Ltd or you're a limited, that's it. If you're a trust, if you're a partnership, if you're a sole trader, if you're a trustee of a trust, if you've got all these other completely legitimate and appropriate structures in place for whatever reason, you cannot claim unless you're in the appropriate incorporated Australian company. So like I said, just a Pty Ltd or an Ltd. If in doubt, obviously get some advice around that very specific issue very, very quickly, because if you've been doing some R&D in another structure, another entity, see those costs and activities are now gone until you incorporate the structure, the entity, and then carry on the activities and the costs from that date onwards. That's when your R&D takes place. So you can't go, oh, I'll just pick that R&D up and I'll repackage it in this new entity. Doesn't work that way from a historic perspective. So big one, and I broke someone's heart the other day. It's unfortunate, but very common. There are some special provisions. So because of the globalization of all technology and all issues these days, but obviously more specifically in the space industry, there could be overseas incorporated entities that can actually claim through special vehicles and special opportunities in Australia through the tax legislation, R&D tax legislation. But I'm not going to go into that other than there is an opportunity. You need to get some tax advice around eligibility for that. So if you're overseas or you're working with an overseas entity, maybe there's an opportunity for that entity to claim R&D tax in Australia. So, and again, ask questions if you need to. So what's the point? I get to this part basically as quickly as we possibly can, because you don't want to do any extra work. No one wants to do compliance just for the sake of it, just for fun. Well, unless you're an accountant or an auditor or someone, but not many people want to do compliance just for fun. There's a cash benefit, there's a tax benefit for claiming it. So what's the point? How much do you get? Now, this is a little bit that's changed in recent past in how the benefit is calculated. Don't get too hung up on it. It's basically if your grouped turnover, and we'll talk about groups a bit later if we need to, if your group turnover is less than $20 million in a year, so that year's group's turnover is less than $20 million, you get the refundable offset, which is basically what that means is a rebate. If you're in tax losses, you get a rebate at tax rate, 26, 25%, depending on what financial year you're in, plus an 18.5% bonus. So you get effectively a 43.5% rebate on your R&D deductions. What does that mean? Well, if you're in losses, so say you spend $100,000 on R&D and you've got tax losses, as in your income is less than your expenditure, and you've got more than $100,000 worth of losses. Basically, what you can do if you're in losses is you swap those $100,000 worth of R&D losses for the rebate of 43.5 cents in the dollar. So you get a rebate, you get basically a check back from the ATO for $43,500, but you lose those carry forward R&D losses of $100,000. So you go, you take my losses, thank you, Mr. ATO. I'd rather have the cash plus the 18.5% now, and they give you the check for 43.5%. That's how the rebate works. If you're paying tax, and this is for both of these programs or both of these limbs, if you're paying tax, basically you reduce your tax bill by that uplifted amount, that 18.5% or 8.5 or 16.5. So you pay the tax man less back in your tax return by 18.5%, 8.5 or 16.5, depending on your situation. So in any of those scenarios, there is obviously a net tax benefit of 18.5, 8.5, and 16.5. That's the underlying extra tax benefit you get from doing R&D. If you're in losses, as I said, you get the rebates where you get the base tax rate, 26 or 25, plus the 18.5. So you get that back as cash. But the net benefit is always that extra little percentage that's added on there. Hopefully that makes sense. Does get a little bit, what does that mean? Obviously, specific situations are always way easier to explain and to talk through. For the bigger companies, so over $20 million grouped turnover, if you're in losses, basically the effect is you increase your losses to carry forward by the 8.5 and 16.5% rates. So you don't get the cashing out opportunity if you're in losses, but you get a future better tax benefit to apply. One of the other new things they've brought in the last 12 months, however long ago it's been a funny couple of years, isn't it? 8.5 and 16.5, what does that mean? Well, as you can see, there's an R&D intensity. The theory behind that is if these entities are given encouraged that they get a bigger benefit by, basically almost doubling the benefit, then perhaps those companies will spend more. Yeah, we won't get into the conversations around that, but it's calculated as the ratio between your R&D expenditure and your total company expenditure. So lots of nuances in the total expenditure calculation, but that'll do for now. Okay, so what's the point? That's the point. Do you want to make a claim? Do you want those benefits? And what that often therefore comes back to is when you're looking at that benefit, how much do you think you're spending or going to spend on R&D? What benefit is it going to drive to you? So what's the net tax or cash rebate benefit you're going to get? Therefore, depending on how big that number is, how much money that is, then obviously that's going to influence how much time and how much you spend on preparing that claim. So if you're getting $1,000 back at the end of the year, not worth a whole lot of effort. If you're getting 10, 50, 100, whatever it is, well then it's worth you starting out. Okay, well maybe I'll fill these forms in and I'll make the claim. So cost benefit, there it is. Okay, so how do we claim? What's the point of the claim? The potential, actually, we'll come back to the grouping, the benefit and the group, because it's important in this industry, particularly for grouping stuff. During a financial year, so you've got to spend at least 20 grand. So I won't read the slides, you can read the slides later. But basically what happens is you spend at least $20,000 in a financial year. So in that year, you spend 20 grand. Then you get to make a claim. If you're spending less than $20,000 during a year on R&D, you can only claim it if that money is with a registered service provider, research service provider, something like that, RSP. So that's a little trick. So you've got to spend at least 20 grand in the financial year, and it has to be incurred costs, we'll talk about that later, on eligible R&D. So 20 grand's the minimum, basically. You're probably spending less than 20 grand, unless you're a very, very early startup and you're going to get the rebate. It's definitely not worth claiming, in my opinion. So you spend that money in the financial year. You get to the end of the financial year, and so financial years, if you like, effectively, in most cases, 1 July to 30 June. So that's your financial year, your annual income year. After that year, the registration with Oz Industry can be lodged. Now, this is a set in stone date, though. So you have 10 months after the end of a financial year to make a registration with Oz Industry. So if we're talking the current financial, no, hold on, let's talk about the last one. So the financial year ended 30 June 2021. We just finished it. You've got, for R&D that you did in that period, you've got until 30th of April 2022 to register for the 2021 R&D. So you get this 10-month window. But if you miss that registration deadline, that 10-month window, bad luck, unless you have an absolutely extreme real circumstance, an excuse, not excuse, but a reason that you missed that deadline. And the reason isn't, I didn't know about it. It's got to be, my documents all burnt up, or, I lost my building or something. So you've got a real reason. That 30 June is set in stone, 30 April, sorry, set in stone. So you've got until then. You register with Oz Industry. They've got this new UBU online platform. We know how online platforms go. They've got this new U-Boot online platform, fill all your stuff in there, done. You get a register. So there's some sort of assessment process by Oz Industry, not an audit, not an actual assessment, but they may check it. So there may be some checking process, but it is not approved. It is just registered at that stage. You get a registration letter back. It says, hey, thanks for registering. Here's your number. So you get a registration number, and you put that registration number along with your costs in the tax return. So there's a schedule that goes on the tax return for R&D amounts with your registration Oz Industry number, and then you put your tax return in. So those are the 2 steps. And let's get double clear on that. This is a self-assessment registration process. You make that claim for that year. At any stage afterwards, so just because you get that money back doesn't mean it's approved. It means they've just assumed that you know what you're doing and you have self-assessed yourself, or you've used an appropriate expert to help you self-assess yourself, and you get that money back. Too many people go, oh, cool, it's approved. No, it's not approved. It's self-assessment, it's tax, and it's R&D, and it's Oz Industry, and they just assume you've done it right. So you should be ultra careful and don't go, yeah, it's approved. Registration letter is very clear on that when you get it. So you're in, you're done, you're making benefits. There is no limit to how many R&D tax claims you can make, as in dollar-wise or length of years you want to claim. And some other programs like the Export Market Development Grant have got those quirks with regards to when, how many claims you can make and those sorts of things. Again, one of the beauties of R&D tax is it is just open for business. You meet the criteria, you get to claim. Thanks for coming. Let's make the most of it. So it is there for you all to benefit from. I'll just raise, again, particularly because of this industry, there are special issues related to overseas R&D. Now, what we're talking about for the R&D tax incentive is an Australian R&D tax incentive. So what the government wants you to do is be spending and doing the work in Australia. If there are extreme circumstances that you can't get the work done in Australia, so the expertise, so the person, the facilities, there is some very specific technical reason that you cannot get that work done in Australia, which could definitely apply in this industry, then you can request proactively, though, to have overseas activities carried out. So you need to, so while R&D tax is a retrospective program, if you're doing overseas work, you've got to be proactive with it. So you've got to actually fill in what they call an advanced finding form. And the trick is in the title there, is advanced. Before the financial year has finished, you have to make, and this is effectively an audit and assess, they have to audit and assess your request to conduct overseas R&D before you're allowed to put it in the tax return. So be very, very mindful of that, particularly in this industry. If you're doing, or you have to do, not if you're doing, but you have to do work overseas and you want to include it in your R&D tax claim, you've got to stop, pause, consider an overseas ruling, advanced finding, and get that put in place before the year's finished, not in the next year. So hopefully that makes sense. You really need to take that one very seriously. Let me keep rolling through. So R&D, what is an R&D activity? What we're looking at for R&D activities, here's the legislation. There's a couple of very clear points. I've highlighted them for you. One thing also to note, Oz Industry, so if you go to Google R&D tax guidelines, Oz Industry have a very good set of guidelines on what core and support activities are eligible and how they define it and what they want you to documentation to keep, and we'll talk about that later. But so don't hesitate, download the Oz Industry guidelines. They are very good. There's some fact sheets and stuff as well in there, but the guidelines, so reasonable sized document with some good examples and some good content that explains this in a lot more detail as well. But we'll touch on some of the key points. Firstly, you have to have core R&D activities, and basically a core R&D activity is where you do the R&D. So let's just keep it simple. And what makes it R&D is the outcome, the result that you want to achieve, the technical result, not the commercial result, not the market position, not the, how many people are going to buy it or it doesn't otherwise exist on the market. It's the technical solution that you don't know or an expert in the industry doesn't know how to produce. So you are advancing the knowledge base of the technology industry, technology segment that you are working in. Now, let's be very clear on that. It's the technology segment that you are working in. You're advancing the knowledge in that space. You're not effectively replicating. You're not doing something that's a little bit different. You know, the technology readiness level number has to be a reasonable position to be able to make an R&D tax claim. Within that, the other important key issue isn't just that you are advancing the knowledge base, it's also that you are following a systematic progression, a scientific progression. And what does that mean? Well, let's just go high school science. You are doing R&D in a hypothesis experiment analysis loop. You aren't being ad hoc. You're not going, oh, I'll have a crack at this, see what happens. No, doesn't qualify. It needs to be, this is my knowledge gap. This is the technology issue that we don't know how to resolve. And I'll come back to that in a second. This is the specific technology issue that we aren't certain how we're going to resolve it. So what do we do about that? Well, we go and look for experts. If we're an expert, great, but we're probably still going to go and source that feedback from others that we know in the industry. They go, how are we going to fix this? You're going to outsource it, whatever. You're going to try and recruit someone to do it. And they go, don't know about that. This is very hard. We'll have a crack at it. We're not going to give up, but we're not sure how or if we can produce that very specific outcome. So what happens? You start the experiment process. You go, I think to overcome this knowledge gap, to create this new knowledge, we hypothesize on the theory of how you're going to do that. And we're doing real, not objectives, hypotheses. Hypothesize that X plus Y equals Z. We know what X is, but we're not quite what Y is, and we want to achieve Z. And that's our hypothesis. And we do an experiment on that hypothesis. We assess the experiment. We then move forward or go back and redo our hypothesis or whatever that needs to be done in. So those are the key words that we're looking for. And you need to document that. Now, experiments happen in all stages of a business. Experiments happen on a lab bench, they happen in simulation, they happen in the real world, and they also happen with clients. So one of the myths with R&D tax is R&D tax only exists in the lab. Well, lab is one place you do R&D, but experiments don't have to just mean beakers and bench tops. Experiments can be in the real world with real products, with real people, with real clients, making things actually be tested, to test that hypothesis, to develop that new knowledge. And that's a technical new knowledge. The hypothesis of the knowledge gap can't be, I don't know if they will buy it. It has to be, I don't know if it will work. But we get really narrow on that. It's not just the overarching, I don't know if it'll work. What within that, I don't know if it'll work, is the reason. So what is the very specific reason, or reasons in most cases, that you don't know if you can achieve that technical outcome at a total level? So we come down to almost the most granular version of the technology being developed. I hope that helps. Definitions of hypothesis, experiments, observations, those sorts of things. We can talk separately. You can Google it. You can look at the guidelines and those sorts of things. And so there are some good case studies about that as well. As well as having core R&D activities, there are supporting activities. We won't get caught up too much in this, but it's the stuff you have to do so you can do the core activity. Absolutely easiest way to put it. If you need a sample of material to do your experiments, well, the gathering of that sample of material is a supporting activity for the experiment. That's one quick example. I'm also not right now, because it sort of doesn't really apply too much to your industry. There are a list of excluded activities. They're in here as a summary. There's more detail on them. Yes, the space industry, I was thinking about, I couldn't think of too many examples in here that I'd be extra worried about you being excluded from, but definitely need to be aware of them. So we've got some activities, you beauty. Okay, well, activities isn't the fun part, the cost of the fun part or the bad part, but more importantly for the benefit. So what cost do you claim against R&D activities? And the very simple way to look at it is, what costs do you need to incur to do the activity? So creating the hypothesis, doing the experiment, assessing it, doing the analysis, feeding back, all those sorts of things, getting those samples, going to a test site, whatever that might be, that you need to do in order to conduct the experiment. So as long as there's a direct nexus between that's what my activity or activities were, and this is a cost that I needed, if you can prove that direct nexus, you beauty, almost those costs are eligible. Now, there are some excluded costs, we won't get into them, but in general, you're going to be able to get most of the direct cost being very important here, as in you can get that nexus very well explained between the cost that was incurred and the activity that took place. So salaries, easy. So who's working on the project? When they work on the activity is the cost you claim. So if you have people that work between R&D and other parts of the business, you need to be able to allocate that time with timesheets between the two things. And I can hear the virtual groans. Timesheets suck. Yep, I know, but you have to do it. It doesn't have to be 6-minute legal and accounting timesheets. They have to just be to a reasonable level so that you can go, well, yeah, this week, this day, this month, this is the blocks of time that I spent on my R&D, or my staff or whoever spent on the R&D. Okay, now can we please claim it? You've got to do a mileage book to claim kilometers in your car. This is obviously way more beneficial than kilometers in a car from a cash tax perspective. So it's worth that little bit of effort to allocate time to activities. And allocation is critical throughout everything we're going to be talking about. One of my catchphrases, one of the catchphrases is, if you can't prove it, it didn't happen and you can't claim it. So self-assessment requires that you prove everything that you are self-assessing. You have something to assess against. The salary, contractors, and again, if they're working across things, you wanted to give you different invoices with, this was the R&D work that we're doing, this is the normal work, whatever that looks like. Direct costs, travel, yeah, I know, materials, like I said, materials you need, whatever those direct costs you have to have in order to do the activities. And also there is an eligibility for overhead. So if you need electricity for your office, and there's an R&D part and a non-R&D part, well, it is appropriate that you claim some electricity for the people's desks, for them to break their lights, that are doing the R&D. So we want to be able to allocate the appropriate and eligible overheads to the conduct of the R&D. But that's all fine. Our little dip point down there is dip. So again, a myth or a trick for the unwary is you go, I bought this 20 grand piece of equipment for the year, I'm going to claim that $20,000. No, it's a depreciation decline in value application, so depreciation. And we're not getting into all the way crazy wacky depreciation changes, writing assets off and that sort of stuff at the moment. But just knowing that you need to apply a depreciation effect into your R&D, not the actual capital cost. Otherwise, go for it, you can claim it. So looking through this, checking no questions, super easy. Special costs, special cost issues. Now, again, these are some of the myths or some of the bigger issues. So easy to summarize it. These are the ones that we see people go, what about this? Or this is where they go wrong. Associates, let's just call them the owners of the businesses for the time being, or the spouses of the business owners, or the very closely related people to the owners, or people that can actually direct and control the business. Associate. If there is an associate that's doing R&D, they need to be paid, as in there needs to be cash going back to them before the financial year has completed. There are people in jail and or people paying significant penalties and fines for basically putting in invoices and then not paying them and or whatever, cooking them up, so to speak, and claiming the R&D on those invoices that never get paid at a very, very later, if ever, date. So to close that loophole down appropriately, associates need to be paid. So what does this mean, particularly for early stage companies? So those of you out there that are maybe in the startup land, this one is unfortunate, a negative, but it's just the way it is. Sweat equity, I'll pay myself in the future, whatever they are, bad luck. Unfortunately, you can't claim it unless you basically get paid out of the company. So very, very important, very, very careful. And again, it's one of those end of year tax issues to just be mindful of as you're going through the year. So, have I made all my final payments to myself or to my associates? Just make sure they've gone through before 30th of June. So very important. Overseas, I discussed overseas a little bit before, and how you assess overseas costs and activities you need to be very careful of, obviously, particularly in your industries. If you are part of a group, and this is another area for this industry, the projects that potentially take place in joint ventures, which are special purpose vehicles potentially that may or may not be companies. So when we were talking about the grouping rules before, so if you're doing R&D in a group, in a consortium, in a CRC scenario, whatever that might be, you need to be very mindful of where the R&D is being done, who's paying for what, what's the corporate structure. We've got IP transition issues, all these sorts of things that I know you love and you're all over. And now you've got this level of, well, where do we claim the R&D? Who gets to claim it? And also making sure that markups and things potentially are removed between entities. So if you're doing your R&D with a group, sharing IP particularly tricky or risky for R&D tax. We'll talk a little bit about that later, I think. Be very careful and get some support behind that. So just watch out for your grouping. We'll talk a little bit about it now. So the grouping rules. So to claim the costs, firstly, if you incur the cost to the R&D, you need to be at financial risk for that cost. As in, what does that mean? Well, if I spend $50,000 in R&D during a year, I don't know if I'm going to make a commercial return on that money. And no one's promised or guaranteed or reasonably guaranteed to pay me for that R&D. So I'm taking it on my own. But if a client says to you, hey, or you go to a client, so this is a contract scenario basically. So if you're the contractor and the client says, here, I'm going to pay you, $10 an hour, and hopefully you can produce this for me, you're at no financial risk because they're just promising, regardless of what happens to the outcome of that R&D, they're promising to make a payment to you. So it's most likely not your R&D, probably their R&D, but they need to check as well. So at financial risk is an important consideration, but it also shows, though, there is a contract scenario who may or may not claim. There is another level to that, which is sort of around who owns the IP, who's controlling and directing it. So on whose behalf is the R&D being carried out is what we call it. And again, this is a grouping in an issue or related party issues or contractor type issues. So you just need to be very, very mindful of intellectual property positions, controlling the R&D, paying for the R&D, that sort of combination of issues that goes around, particularly if you've got researchers involved and that sort of stuff in your project. You need to be looking through these extra limbs just to be careful of making sure that you're getting the right entities making the claim. A little dot down the bottom, feedstock, all pops up reasonably often. Unfortunately, it's a pain in the ass. But basically, if you're selling a product you make out of the R&D, then there's these potential feedstock issues. So doesn't mean it's not R&D, which is important because that sale may or may not take place of the products that you're making. So you still may be able to claim the cost, but if you do end up with a product that you can sell, then you may have these feedstock calculations you have to make back into your R&D. So just a little bit, be mindful of. I couldn't think of too many scenarios in your space that feedstock applies in, so we'll park it there. Next, self-assessment. This is the biggest one. Obviously, if you're eligible, great. But if you don't have, as I've said, if you can't assess yourself, and that's not by, hey, Steve, that's a great R&D project, well done, you can claim that. It's, hey, Steve, here's all my documents. I've told you my R&D was in this format, and here's all the documents that prove I did that. great. There is something to actually assess, not just a conversation, but things to actually assess from a cost perspective and from a technical perspective. You need a good documentation process. Not documented, didn't exist, bad luck. Sorry, you can't claim it. Them's the rules. What does it mean? Like I said, we've already talked about time allocation. So how are you allocating your time? What is reasonable for you? That's fine. Cost recording of the differentiation between costs. So if you're traveling at some stage ever, or we're allowed to travel, well, we're stuck in Perth, you're doing some travel, differentiating between the R&D trips or the people doing R&D and the other people is important. So, you know, there's just those direct, we talk about contractors and that sort of stuff. Or if you've got equipment that is used sometimes on R&D, sometimes on other things, how you differentiating the time or the use of that equipment between tasks. So just, you know, be mindful of that. You need to be able to track that. And the beauty of this is, though, so obviously you have to do it in order to be able to claim it, but the better you do this, the bigger your claim is. Because you can put your hand on your heart. You don't have to stress, you don't have to worry, you don't have to go, should I or should I come in? You've got the direct, at the time, contemporaneous evidence that says, yes, you are now allowed to claim this, because this is the nexus that we talked about between that cost and that activity. So you claim those up. So yes, there is a little bit of extra bookkeeping, management from a financial perspective, we'll talk about that a bit next. But you do it right. Your R&D claim is super easy. Yep, I've done this for over 20 years, and I can't tell you the difference between getting a good claim that is documented and allocated nicely, with, you know, doesn't have to be massive amounts of detail, but nicely enough. You can go, cool, that's in, that's in, that's in, that's out. Whereas you get one that's not done well, yeah, well, that's in, don't know about that, so we can't claim it. Well, you know, so, you know, I'm getting it. So good allocation of record keeping from costs, bigger claim. And that's exactly the same with how you document the technical development process. And you have to. If you're in software, if you're in hardware, whatever you are working on, there has to be some form of document trail that says, this was the knowledge issue that we sort of identified at the beginning. This is why we thought it was a knowledge issue, a gap. And this is some validation from external parties. Oh, and here's what our hypothesis was. Here's a statement that we think that if we undertake this, it will produce this. So, yeah, our hypothesis. You don't have to call it the hypothesis was. You have to have statements and comments internally, records that show that you had effectively a hypothesis. And then the experiment. When did you do it? What happened? Was it a client experiment? Was it a lab bench test? Did you get external analysis done? Did you do the analysis yourself? Where's your spreadsheets analyzing the data? Whatever that is, these are the documents. You're going to have them somewhere. You need to just be able to collect them up and put them together so you can define all of these parts. You know, simple, not simple things like who's approved the project, who signs off on it, and who do you go back to internally to let you keep doing it or to extend your budget and that sort of stuff. So R&D management, not R&D tax, R&D management. If you do good R&D management, do good. If you've got very good R&D management, you're going to have a very good R&D tax claim, and they are separate. The R&D tax is the last part of the, like, yeah, cool, here's my management documents. Can I claim them? Yeah, no worries, here's your claim. Won't always be in the language of the R&D tax world, but it will be correlatable to the R&D tax world. And I also want to touch on external validation. So if you do get into the situation of being audited, who do you think is going to be believed more? You, when you make a statement, industry expert, fantastic. So obviously, the more industry expertise you have, the better that validation is. But if you also manage to go to an external reference, an expert, university, a statement of, I've forgotten the words, the patent analysis of the landscape sort of searches to sort of see what else is out there. If you're doing these external reviews, before you get into the detail of the R&D, to really go, what else is out there? What the government doesn't want to do is basically pay for you to do something that was already existing or wasn't a big step forward in R&D. So, and from a positive perspective, that's what you should be doing as well. Obviously, that's what we should all be doing. So you're unlikely to be doing something that was off the shelf available, but they want you to be able to prove that it wasn't off the shelf available. So external validation at different stages in your R&D management is going to be very, very helpful. Mindful of time. Extra topics. Firstly, I touched on it at the beginning. R&D is a cost-benefit program. You do the work, you get the benefit. But there's that time lag to getting your, potentially if you're an earlier stage going on the cash, there's a time lag. So there are now fabulous debt funding opportunities out there, including Radium Capital, that can help you basically bring forward your future cash flow. So really recommend, it's becoming quite a common issue. Recommend, my professional opinion is it's worth considering. It's just not financial advice in any way, shape or form. So have a look at your cash flow and R&D tax, even if you're not doing the debt funding part of it, it's part of your cash flow plan. Too many projects go to raise funds, and we'll sort of jump into those other things. So the investors that you're potentially going to want to help you with your project, they're going to want to know, if I give you $100,000, are you going to claim R&D on that and potentially get another $43,500 back on that? So they might give you 100 grand, but your cash flow from that 100 is actually 143. So where have you built that into your, into your pitch deck? Where are you modeling that into your financials to take the full benefit of R&D? And then we go, oh, okay, well, I've got a 43 grand check coming back, but instead of waiting 6 months for that check, how about I get some of that now, respend some of that on more R&D, and actually get a bigger check? So recycle your $100,000 of R&D quicker, spend more than $100,000 and get a bigger benefit back. It's just using the cash that you're due as optimally as possible. And too many businesses are missing out on significant cash flow opportunities because they're not planning, particularly in your space. High R&D, potentially very high costs. So let's look at how you leverage those costs as effectively as possible. Jump to the bottom dot point on that list because it applies to this. We won't talk about it. ESIC is early stage innovation companies. If your entity is an ESIC, the investors into the ESIC potentially get even more tax benefits. So when we're talking about your funding to do your R&D to create new industries, ESIC is a vehicle potentially to help you get investors or to give investors a potential bit of extra love. So quite a nice little tax incentive for the investor that gives a cash benefit because the investors are more encouraged to invest into you. If you haven't heard of ESIC or you're not making the most of it, reach out and find either me or somebody else that can talk to you about ESIC. We talked about groups, we talked about associates. Don't forget the grants, obviously all sorts of, all sorts of grants out there. The bread and butter ones, the Export Market Development Grant. Again, global industry you guys are in, as soon as you're starting to do that exporting or looking at marketing or starting your marketing for your exporting, definitely take a look at EMDG. And lots of myths, big changes recently about EMDG. So really get on the front foot with your EMDG opportunities. And other grants that may be available, accelerating commercialization, the entrepreneurs program, those sorts of opportunities are out there for you as well. Oh, and grants as well. Sorry, one final thing. Double dipping on costs between R&D tax and grants, really dodgy, not dodgy, dangerous. You can have a project that does grants and R&D tax. So obviously the overlap, you need to be very careful on. So coming back to the management and splitting costs and that sort of stuff. I think we're nearly there. That is it. We're wrapping it up right now. Would anybody have a question? You've all been sitting there quietly eating your sandwiches and getting ready to watch the replay and go back through this gold that I've just given you. Anybody's got a question, I'll give you 20 seconds to whack it up there. Otherwise, Jess, I am more than comfortable with turning this off. Where's my stop button? There it goes. I'm back. Yeah, great. I am done.
Fantastic. Well, you've put your contact details up there, so if anyone does have any questions after they sort of digest everything, they can connect with you, and yeah, even just email us and we can put you in touch with Steve as well. So thank you so much for your insights, and it was great to have you back on the City Festival of Space. The session's been recorded, so that's the good news, and it'll get put up and people can sort of watch it and go through it again. So that's great. Awesome.
Thank you for having me. Thank you. Good luck to all of you. Is the tax one? Oh, hold on, Chris, you just made it. Jeez, mate, you couldn't have got much. Is the tax advice and accounting fees also? Oh, there we go. That is a golden question. No, they are regular tax costs that are part of the compliance. No, but R&D management. So, like I said, we've got two. You got your R&D tax claim. If you're doing R&D management, that is obviously part of managing R&D. Therefore, you can claim those costs. So, no, the registration and compliance costs, no, but the R&D management, yes. So you sneaked it in there, Chris. Well done.
Just in time.
Fabulous. But I'm available. You've got my contact details. Anybody, anytime. I'm on LinkedIn. Yeah, anywhere, anytime, any place.
Fantastic. Well, look, huge thank you again for your time, and yeah, enjoy your day. So yeah, huge thank you again to Steve and Carroll from Evolve. And the next session is coming up on Friday. We're coming up to our last, like, literally couple of sessions of the City Festival. So our session on Friday will be SA Space Services Mission, and we've got a great panel coming from various different companies to talk about the Canyini mission that they're working on. So we've got Darren Lovett, who's the director of the South Australian Space Industry Centre, Pete Nikoloff, who's a SmartSat Canyini mission director, SmartSat CRC, Jack Rintle, who's a spacecraft systems and test engineer at Innovor, Alex Grant, who's the CEO at Myrota, and Sarah Kennard, who's our moderator, and she is from SmartSat CRC. So hopefully we'll catch you all on Friday. Enjoy the rest of your day, and thanks again for joining. Bye. See ya.